When we're looking at the daily, we see a very, very small range. Right? We also see slowing momentum up. We're pushing at the upper extreme of that range, and it should be limited in scope to that 61% retracement. So we know we're at the upper end. We know we're unlikely to push further. The probabilities are extremely low that we go beyond that 61% to any amount, like any extremes, right? So we're limiting ourselves to this area here. Currently, it's a range of about 3 boxes. And so we're allowing ourselves a fourth box if we need it at the top of the range. Right, so this is the range we are working with. That's 3 boxes. We're allowing ourselves 1/4 box just in case we need to, like box number 4. And I've been selling in this range, right? So I have cells at the bottom, I have cells in the middle, I have cells at the top. And according to the thesis, I come to work in the morning and I'm here to do 3 pips, 3 pips, 3 pips off of support and resistance. I see myself at resistance right now. I'm willing to take a 3-pip trade. Where did my target go? Oh, my target is right here. I changed the color of the lines. I lightened the color. Let's go back and change that because I had too many lines, but now I can't see it. There we go. So now here's my take profit over here. You can see it highlighted in black. Okay, so I'm a seller for 3 pips, 3 pips, 3 pips today. And as you can see, I also built I built a running position of shorts at the top of this long move, right? So from this upper zone, I want to be shorting the ultimate target for the signal trades, for the swing trades. We're looking somewhere around 840, 830, right? So leave these runners running at the top. Today, we're going to focus on making 3 pips, 3 pips, 3 pips. And we're going to do that off of the very top, right? So we already determined on the daily scale of things, we're at the top. We have to zoom into this on an hourly scale just to see the range is delimited by 3 boxes, 27 pips, 28 pips or so. We're pushing away from the high. We're falling from the high on the current hourly candle. So we look at that on a 5-minute scale and you can see the formation, how that's happening, why it's happening. And we can choose to participate in this. You know, if you draw your ladder here, right? Let's draw the ladder very quickly. We have the floor, we have the ceiling, and then we ask ourselves, are we, which way are we going? Away from the floor or away from the ceiling? It's always the same questions. It's the answer that you react to, right? So when we see these levels and we want to take an action, we want to, take a trade at some of these levels, you have your size already predetermined, you have your target determined, you have your stop loss, you're just clicking, right? So this ladder gives you call to actions. It reinforces the task that you need to do at the certain price. It's the price that you're reacting to, right? In the position. And so when I take that mindset over to the 1-minute chart, the levels are now identified by the box, and the box are stacked in the direction of the market moving. And the box, unlike the lines, have an end, right? So the end of the box now gives us a piece of information, right? It's a point of reference. The market is breaking out of this box right here with all of this time unused, right? See all this unused time in the box? If I remove the end here, if I remove the end of the box and I just use a 9-pip grid, I won't know that there's all this unused time from that point of reference, right? The point of reference, the time is what I'm looking at. The unused time in my mind will be translated into more money instead, right? So instead of moving sideways and wasting time in our box, the market is moving vertically and delivering price, right? And that's kind of the exchange, money for time or time for money. When things are sideways, we stay in the box or two boxes or three boxes, and we don't break out above or below. When things start to break above or below, we tend to stack boxes. And in that instant, when you start stacking boxes, you're exchanging money instead of time, right? Because you're leaving all that unused time, which you don't know about if you're just using a straight line, right? So the point of reference, the time, is the last piece, right? And it allows us to understand volatility as it refers to the box, right? So it's just a point of reference. It's us understanding that in this amount of unused time, we should have money instead, right? So maybe it's coming over here. We'll see, right? As long as it's not breaking 965 at the top, which we already determined to be our ceiling for today, right? We already determined it's unlikely to break the ceiling for today. As a Fibonacci, 61 is extremely, important. It's our golden fib. And so we're hoping, you know, if you're into that hoping stuff, we're hoping that this was the top, right? And then as such, we're now going to be heading down for the next couple of days. And as a trend, that may fulfill multiple boxes. So today might be three or four boxes, tomorrow might be three or four more boxes. And if you're managing those swing trades from the very, very top, you don't need to use the boxes, right? You're just using a faraway target. It's a swing trade. And in the case of this particular swing trade, it's set up to be a 3-to-1, right? So we're allowing about 30 or so pips of risk, right? In order to gain approximately 90 pips of profit. And so if you get more than that, you've probably executed exceptionally well. If you get a little less than that, it's risk management. It's okay to leave money on the table, right? The hope with those swing trades is that it reinforces uh, our bottom line, right? It compensates for some of those 4 box losers that you may have had over the last few weeks. In this account, we haven't had any, right? In this account, yesterday I managed to hedge the account to survive the push up, and so the account is still at 1043. We've lost trades, but we have not lost capital in the account. And so uh, if these swing trades work out, while I make 3 pips, 3 pips, 3 pips, the account will grow substantially while we're making 3 pips, right? So in the background, there's growth happening. And it's not tying up $1 million, right? It's only tying up 12 positions. Each position is 0.01, right? So I'm risking 12 trades in total in this entire upper range. So about 30 pips of range. And so I'm about to be playing for 3 pips, 3 pips, 3 pips. Right here, right now, I want to sell that. Right, I'm at the top of the box. It's a measured move from the very, very high. So I'm selling this thinking that we're going lower, right? So this click that I just took is separate from those swing trades, right? It's a different kind of setup, different kind of mindset. I'm only here for 3 pips, 3 pips. Those runners are there for maybe 2 or 3 days, right? So we'll see. Ideally, I don't want to play ping pong. I don't want to play against my runners, right? So if the runners are set up at the very top and we're falling for the next couple of days, And the intent will be for me to be short during those couple of days to do my 3 pips, 3 pips. Right. So I need this to go green at resistance so I can sell it again. And resistance being something in, in the order here, somewhere in this area, right? Somewhere in this area here, I want to sell so I can get more 3 pip trades. All right, if I see it push up, even if it's like, I want to sell expensive, literally, is what I'm trying to do. All right, next candle, there we go, sell. I'm still getting familiarized with C Trader. There's a lot of functions when you right click on things. There's so many menus and so many things to discover. I'm more familiar with MT4 or my typical trader evolution. C Trader I've traded before, but not to the extent that I'm doing nowadays. So this is actually quite interesting. We're making money consistently, so right. So that's the idea. Small yesterday was where we hedged. We did not lose anything, but we did experience drawdown. Uh, let's go to the bottom. Let's go symbols because I only traded the euro. In total, in the account, uh, we've had 59 long trades, 42 short trades, and losses. That's not bad, right? We've been trading this account for over a week now, right? That's kind of what we're hoping to achieve, right? It's okay to have losses. It's okay to give up on some trades. Like playing chess, there's no way you'll win a chess game without losing some pieces. All right, you have to give up some men along the way, and that's kind of what we're learning to do here. Uh, oh, there's a myself, and I'll do it 2 times. Right, the average white line there, uh, ideally, will stay above me, right? Because of the position that I built, those swing trades at the very, very top, that should allow my average price to stay at the very, very top while I continue to make 3 pips, 3 pips, 3 pips on the way down, right? I want to keep my average price above if I'm selling. And so that allows this little buffer here to work in my favor, right? The bottom right corner where I am running, and this is called updraw, right? The opposite of drawdown, right? So you can't go wrong when you have updraw. It's some people will tell you you can't go wrong if you take profits. That's a fact, right? If you close winning trades, you can't go broke. What will happen is you'll neglect to close the losers, and that's what will make you go broke, right? So taking profits is good, but taking losses is sometimes better, right? So the loss is in your control. We have to understand that part. I just missed a good click there at the top. Right, so I'll take this little line away just so it's not in my way. So this week's events with Thanksgiving, I think that the news is forward loaded. The calendar is forward loaded. It's front loaded. We're busy on Wednesday, tomorrow, and then the rest of the week is mostly all news coming out of Germany or the European Union. So uh, tomorrow will be the big day, and then watch the market react as the North American markets will be on holidays. In Canada, we had our Thanksgiving about a month ago, and so it's a different holiday for us, but we still respect the U.S. markets. Uh, right? So it looks like our bias has been validated, right? The euro is slowly drifting lower, and considering the size of the range, the size of the range, we should be able to see lower lows, right? So if I go to this picture here, we should be able to fulfill an average day. If so far the range has been less than 3 boxes, an average day is somewhere around 70 pips or so, right? So that would take us right around, oh, it's smaller than this. So right around 89. Okay, so if you're in the mood to play 3 pips, 3 pips, 3 pips, and you're in the mood to stack boxes, you want to be selling things that are expensive. And if you do stack boxes, you're likely going to stack them on top of each other, right? So you're going to be building a position and waiting it for it to fall. If you're not playing with drawdown, and then your idea is to stay in box one, right? So you want to do what I'm doing here and sell the top of box one, wherever your trades are, wherever your 3 pips, 3 pips is, that's your box one. You want to be selling at the top of box one. Right? The idea is you're trying to go across the box. And then if that works out, you're now in this new box one and you continue, right? And then you continue and you continue and you continue. If you're playing with drawdown, which is what I've been teaching you, you want to be building boxes and boxes of positions that play out in your favor in the end. All right. So you play with the trend, the wind is in your sails, you remain in box one and just keep stacking box one. Right? Keep recycling the same trades in box one. If the market pushes back and gives you a pullback or a retracement, you play that pullback, you play that retracement. Right? And that's kind of the idea. The boxes allow you to size up or size down. If you stay, sorry, there's a cat here on my tongue. If you stay in box one, which is kind of what I'm trying to do right here, right? I position my 4 clicks in one box, and then I need to recycle those same 4 clicks. I'm not allowed to add more. I'm only allowed 4 clicks per box. So 4 clicks per box works out in this environment to be about 1%. And so, depending on your account, your psychology, you may want more clicks of smaller size, or may want fewer clicks, bigger size. Right? The idea is to spread 4% of your account across 4 boxes. We just don't know how that spreading will take place, right? So we have to live it. It's this allowance, right? I prepare to spend that money before I'm forced to spend it. And by creating a plan, by doing this top-down analysis, I set up probabilities on one side versus the other, and I put my money on that side. And then I'm prepared. Plan B is to survive the lesser outcome, the lesser probable outcome. So we have to set ourselves up to survive that lesser probability, right? Just in case, because it does happen. 70-30, right? The bell curve, remember our bell curve? We're hoping to make our money at the top of the bell curve, which is about 70% of the time. And you can see from our own track record, we're exceeding that. We're pulling in about 90% of our trades are winners. Right? About 90% of our trades are winners. And so we're doing better than statistics. We're doing better than the bell curve. And so that's kind of what we're hoping to do, right? That's how we overwhelm our losses. The losses are managed, they're contained, they're far and few in between, and they don't ruin us, right? Because we take them. It's called the risk of ruin. If you keep pushing your stop loss, or if you ignore losing, if you refuse to lose, you're inviting a ruin. If you take routine, consistent, manageable losses that have a meaning behind them, that have a system behind them, you're postponing the risk of ruin. See how that works? And so professional traders, we lock in our losses, right? We refuse to lose beyond a certain number. For me, that's 36 pips because of this particular strategy, and I'm trading the euro. But it's built in, right? It's my max loss, it's my ejection seat. And I obey that like it's a religion, right? So the probabilities are then left to me controlling the wins within that 36 pips, managing those losses, right? If I can lose less than 36, I'm a superhero, right? But I'm not allowed to lose more than 36. And then that postpones the risk of ruin. I choose, or I have to set it up so that I don't lose all my trades at 36 pips. You know, I have to have more winners than losers. Right? So this is another opportunity to sell up here. Right? I'm still below my moving average. Right? That my average price, sorry. That's that white dotted line there. That's the dotted line created by the swing position and my 3 pips, 3 pips. Every time I take a 3 pip trade, it moves this line. Every time that same 3 pip trade closes, that line resets back to where it belongs with, you know, with the position that I have. And so I built a position at the top of this move, and I think you and I followed along. Let's go to a 4-hour chart to make it easier to see. Right, so over the last couple of days, we've built a position up here. Right, we've been selling and selling and selling, making money on the wicks, making money on the rejection up here. Right, it's all a big zone of rejection up here because of this. Right, we know it's not going to the moon. We know it's not going to the moon because of this. Right, so we're playing the rejection that the left is creating. Right, the left is creating a whole bunch of rejection here, and you and I are zooming into this on a microscopic scale, and we're selling and 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 selling. We're making all our monies being sellers to the people that think this is going to the moon. Right, and every time we take a little sell and we make a little bit of money, somebody else steps up and thinks it's going higher, and so we sell it again. Right, we have a bigger picture in mind. Right, we know there's limits to this swing, and we're willing to participate and take the risk for, you know, we take the trade that nobody else is willing to take, nobody else being the crowd. Right, so if the crowd is not willing to sell up here, it's because we are. Right, so it's this probability assessment. As long as you set up the probability and you trade that probability, in your mind you already know where you're wrong. Right, you already should know where plan B needs to get executed, and you unfold that plan as you see fit. You've already created it, you just need to execute. Sometimes you get thrown into plan B, and then, you know, 2 bars later you're back into plan A. False break, you know, there's a pretend move into the other box. This is what we're here for. Right, a mechanical approach to this box stuff is really difficult. You have to have discretionary trading in the box, but you're using a sniper rifle for your entries, and you're using years and years and years of skills and practice. Price action trading, right, it doesn't come overnight, but it does come at support and resistance. So don't fight that piece of it. You know, sell when things are expensive, buy when things are cheap. It's okay sometimes to buy high because you think it's going higher. Right, there is a time for that. Right? But that's not what we are here for. In our in our way of making money here, it's all about selling expensive, buying cheap, and then doing just that at a specific level that is already predetermined, right? And so for me, right here, right now, if I can get to in this zone right here, top of the box, right in this area here, I would be a seller. This is now even more inviting, right? So now this is now my new box one, right? The only trades I have open are all in updraw as of right now. Right? This is my bottom stack from the runners. And so ideally you don't want to be playing ping pong. You want to play ping or pong. Right? So look at this. This looks like a slowing momentum, you know, kind of a rotation happening. We're turning a ship in the ocean on the 4-hour scale, right? So if we go down to a 1-hour scale and zoom out, right? We have that really tight range up at the top, and now we're trying to create a low at the bottom of the range. If the floor gives way, it opens the way to the next floor, right? But we have support before we get there, right? So this will become an area of concern, maybe a bounce, right? And so, but this is the kind of stuff we have to look at. We're creating this bigger picture, and then you find yourself down on a 5 minute, and you're highlighting, you know, your floor, your ceiling, your parameters, your limits. Once your limits have been defined, you understand where your risk is. You understand where you have to execute, where you have to take things off, where you have to put things on, right? And uh, right, so these were yesterday's trades. Today we've done nothing, right? Well, actually, have we? There should be some closed trades in here. We've closed some trades a few minutes ago. Oh, there they are, right here. It's because I put everything so I lightened the the brightness on the background light background lines. There was just too many lines on my chart. All right, so this is what we've been doing so far. All right, so if I can sell resistance up here, oh, there's a green candle right now. I'll sell that. Right, so the idea is to remain in box one all day long, right? So this is not box one. This is box one. Right? I'm trying to avoid box two, box three, and box four. Right. So if my bias is good, if my wind is in my sail, that will help. Right. But it's not the end all be all, because within the trend, within the bias, there are pullbacks, there are retracements that will be 4 boxes. Right. So the trend is not what you're trading here. You're trading the 4 boxes. Having the right trend just makes things easier. Yeah, the account's only, well, I shouldn't say only. The account is progressing. It's moved up about $3 today, $4, right? And we've only been trading for 30 minutes, but we've not taken any losses, and we are in updraw, right? We have a position built for a day or so, right? For a bigger outcome. And so we are, if you add the two together, we're up about $16 on the day. If I can see a green candle here, I'll sell it. I'm allowed 4 clicks in my box. Oh, there we go. I just put a third one. I think my headphones are dying. Just a second. There we go. All right, so I have my 4 clicks spent. Actually, I think I went one too many. No, I only have my 4. The swing trade position is made up of 12 micro lots. And so that allows me 4 clicks per box still. And so I'm up to 16 open positions. And so that's my 4 clicks plus my 12. If I can close 4, I can keep recycling 4. Right? I don't want to touch the runners. The runners are for, Thursday or Friday ultimately. Right? So at the end of the day, when we are breaking through the floor, when we are finding support, near the end of the US session, I'll be moving the stop losses associated with the runners to where we are right now, right? This level right here, 0940, these wicks where we are right currently, this will be where the stop losses will go for the runners, right? We want to lock those in to make sure they don't end up costing us money. For the rest of the week, we'll be in updraw. And we can continue to make 3 pips, 3 pips, 3 pips. And so I'm not sure if you guys are familiar with the EchoFin setup. Everybody's platform, whether you're using the phone or you're using your desktop, there should be a tab here somewhere for team signals. And yesterday I published one in the chat room, and it automatically shows up in this tab on the right side. Right, so right here I put that at yesterday right around lunchtime. Right, and the idea was to sell at the bottom of the current range where we are right now. Expect a target about 90 pips away, about 100 pips away, and protect your upside to 965. And in the course of 12 hours, 24 hours, we beat the upside by 2 pipettes. Look, this has played out exactly according to plan, right? So fast forward to where we are now, those are the trades you want to keep open, right? The top of the range. This is what I built into. This is what I published yesterday. This is we're holding the top, and we're hoping to go much, much, much further down, right? So ideally, it's a matter of time and you not disrupting a good thing, right? Don't interfere with those swing trades if they're working. We're just going to continue to sell stuff that's expensive, right? For 3 pips, 3 pips, 3 pips. Nothing fancy. We're going to forget these trades even exist until we find support at a much lower level. Right? And the support we're looking for has already been identified by price. Right? We're not guessing. We're just looking at the middle of the previous range. Right? Before we took off, what was our sandbox back then, right? And we're going to be targeting the center of that. And so it's right here. It's almost like 2 strategies playing with each other, right? But we're using the money independent of each other. Our 3 pips, 3 pips, 3 pips, the money we're putting in these boxes is not controlled by the swing trades. However, the updraw is a real benefit to us, right? It kind of gives us a cushion, a margin of error, right? So if I'm bouncing off this low here, I put the box on the low, it gives me an idea, oh, where the top is. I want to be a seller up there, right? And if it's moving beyond, I want to stack boxes and keep on selling. Here's my sell. Right, I'll put 1 and 2 there. I just put 2 trades there. And I think we've just made a lower low, right? We have just now made a lower low. And so that's kind of important to what we're trying to do. If you've made your target, if you reach your goal, if you made your 20 pips, your 20 trades, whatever it is you're striving for, walk away and be done. And so you're not trying to break the bank, you're not trying to break world records, you're not trying to outdo yourself. You just want to do average. Right? Leaving the casino is way, way more important. Way more important. So I still have 2 clicks to spend. I'm allowed 16, so let's see if I can get one more right there. Right, I'm well below my moving average, my average price. That's the updraw that I'm dealing with. Right, that space, that difference is house money. Right, I don't want to spend that house money if I can avoid it. I should have took my last trade there, but I'm saving one to see if I can get to the top. Ultimately, I'm looking for something like this, right? Something down here. We're just trying to see where the sell, where the turn will come. Is it here? It might be right here. Right, this you can repeat this on any time frame. Right, I'm doing it on the 1 minute chart because we only have an hour or so together and you need to see how this works. You can repeat this system on any time frame. The box needs to be adjusted, obviously, right? The box is an average range. See, average range. Once you have the box for the average range on that time frame, you're playing bars within the box on that time frame. And so if you have the bazillion dollars and you want to trade this method, you can trade your bazillion dollars on the daily chart. Your box will be huge. You'll have more than plenty of opportunities to click your bazillion dollars away, right? On the 1 minute chart, this works really well because we have small money here and it's manageable. Psychologically, it doesn't damage us and it's not like we're losing a small house, right? So, but the system comes from that type of environment, right? You can run this kind of money, you can run this kind of system, you can operate money through this on any time frame. Our psychology needs to catch up. Right? You need to earn the right to grow. You can't overnight put $100,000 in your account and think that you're going to turn that into $1 million. And you need to learn the skill to grow money. Right? So every time we close one of our 3 pips, 3 pips, 3 pips, our average price goes back to our swing position average. Right? That's like that buffer that we have. If I click, if I spend a little bit of money on my 3 pips, 3 pips, 3 pips, I'm borrowing from the house. I'm borrowing from my profits to open those trades. All right, and see how that brought the line down. All right, so my objective is to keep that line as far up as possible, as far away from me as possible. All right, so we're up $13 with our swing trades. we've made a handful of pocket change of 3 pip trades. Let's go check just to see what that does look like for today. Let's see what this looks like in a month, 3 months. All right. Uh, it's okay to lose. It's okay to win. Ideally, you want to win more than you lose, right? But the losing part is part of the game. It's not avoidable. Don't try to design that away, right? Design that into the system, right? So 59 longs, 54 shorts, 113 in total, 146 pips, $46. And that's not counting the runners that are running right now, right? So that's another $13, $14 on top. uh, oh, $9. There's a pullback. Oh, opportunity to sell. Oh, I missed it. Damn it. Darn it, I said. Right there, I'll put one. It's not expensive, but I saw the break coming through, so I'm hoping I'm correct. I just want to see this resolve to the downside. And then because of this unused time in the current box, that gives us the indication that, hey, if we get into this box here, there's probably that will be spent in this direction instead, right? Towards here somewhere. So that's kind of what we're looking for. We're looking to exchange money for time or time for money, but we're doing it with a point of reference. If we ignore that point of reference, if we ignore the right edge of the box, you might as well just be using straight lines. And basically, you're back to square one. You're back to ignoring the x-axis. Right? The x-axis is there for a purpose. Few more bars and we'll know what's going on in this box. I feel like a kitty cat, man. I'm always in the box. Here we go. Boom, boom. So a little pullback on this candle would allow me to sell. It's like they heard me. Waiting to sell. Waiting to see if I can sell expensive. There. The wick on that second candle, I sold when the wick was pulling up. And I did that just before the second rolled over, before the minute the candle finished, like just at the last few seconds. Come on, I'm trying to zoom in and it resets the view every time. There we go. All right, so now we're breaking the lows, we're breaking the wicks, we're making lower lows. Our swing trades are well underway, right? So you'll be able at the end of the US session, right? At the end of the US session, you'll be able to put your stops at this level right here on all your swing trades and then let it be, right? Your target is now twice, if not 3 times your risk further away to the downside, right? So if you're selling up here, you want to give yourself right for today 36 pips of stop and then At the end of today, your stop goes to zero, right? You go to break even. So yeah, you want to lock in some profits if you can. So better than break even would be awesome. And if you move your stop to right here, right now, I think you'll be good to go, right? So we'll we'll let it be. We'll let it be. Tomorrow we'll see where we are. Hopefully our swing trades are still running to the downside, and we'll be able to resume making 3 pips for an hour or two, 20 trades or so, and then we'll be done, right? That's the idea. We don't want to interfere with a good thing, and we don't also want to be, losing sleep over it. And so if you move your stop to break even, that sets that apart and aside from what you're doing here. What we're doing here right now is selling because it's expensive, and I'm only selling because I'm trying to make 3 pips because of the situation, the fact that we're breaking down, so on and so forth. Right? This is separate from our swing trades. And so the signal in the group, it's really it's labeled a signal because I wanted it to be a swing trade, and that's the idea. I'm going to start publishing maybe a few more of those over time, uh, as we see fit. I'm going to try to keep it to the euro, but I'm looking at different things always. So if I may put like something on gold or other instruments once in a while. Right? But ideally, the euro is where I want to be buffered. Right? That's where I want to have house money instead of risking my own. I'd rather risk from the swings. Right? So that's kind of what I'm doing. And situationally, at 0960, we could be falling for a few hundred pips, right? So you don't know how long you're going to be holding those swing trades for. And we have a target in mind, right? The target is looking at support, but we can also use time to execute in that respect. So maybe we can touch on that tomorrow, right? So the idea is if you've made money right here, right now, on your 3 pips, those ones should be flat. On your swing trades, they should be at break even or about to be at break even. And then we meet again tomorrow. Same time, same link, same everything. We'll have runners running, hopefully, and we'll resume making 3 pips and overfist. Right? So I wish you guys luck, and I'm going to go to the restroom before I meet with Francisco. See you guys later. Enjoy. Bye bye.